time for viewer mail.
We have viewer mail?
Yes, we do.
Good. If you'd like to send viewer mail, please send it to Doug@riskandrewardtv.org. I would be happy to answer your question. What do we have this week?
This is from JJ in Dublin, and he writes, earnings are fantastic. Why isn't the market moving up more?
Well, it's a great question. That is a good question. You know, Apple beat estimates by a good margin. Many others have too. Not only that, we know that the earnings are rear view mirror. They're in the past, but they've also announced good guidance going forward.
Guidance has been going up.
Guidance has been going up, so that's excellent. So looking forward for some of the companies, they think they're going to do well. But there's a lot of fog out in that foggy windshield. There's a lot of icebergs in the fog. You know, traders tend to look out 6 to 9 months. You know, they're looking at what's going to be happening in the economy, what's going to be happening in the markets, and so on. And when they look out into that foggy future, they don't get a real warm and fuzzy feeling. You know, if you think about what's happening 6 to 9 months.
End of QE?
End of QE2, right? That's coming here in June for sure. And then, you know, that'll be basically a monetary tightening by the Fed, whether they want to announce a tightening or not. It will be. They certainly won't be as lax as they are now. So that's one thing. So monetary policy will be tighter. Fiscal policy, we're going to be spending less.
Government battles?
Government battles. So state and federal, or state and local governments will definitely be spending less. Federal government will be spending less too. Unemployment insurance for the 99ers is going to run out in the next 6 to 9 months. There's still a lot of people that need unemployment insurance that aren't going to be able to get it. There's really no rebound in housing. You know, I heard a statistic today, well, not a statistic. I heard an opinion today that the housing market had 20% more to go down.
That would be huge. I haven't heard that number before.
I think that was a headline-grabbing number, but
it sure is.
But nobody's saying 20% up in housing, and that's kind of, you know, a lot of people would love to see that. That's not really in the cards next to 6 to 9 months. We're going to have a debt ceiling debate. We're going to have a 2012 budget debate. That's going to go on all summer, and we're coming up on an election. There'll be candidates out there running.
So sell in May and go away?
Well, sell in May and go away. Okay, so that's an old Wall Street saying. You know, we don't give specific advice here on what you should be doing. So do whatever you want to do. It's going to be a long, hard summer, and you know, we're at that double top kind of technical analysis range, and it could be difficult. There's some serious headwinds. So you wonder why when Apple blows away the numbers, the market doesn't rally 500 points. It's because when you look out 6 to 9 months, they may not be blowing away the numbers anymore.
And what's your takeaway?
So my takeaway is, when you're wondering why the markets aren't doing what you expect, ask yourself why they're doing what they're doing and try to figure out what you missed. Markets are forward looking about 6 to 9 months. You should be too.